Namaste. In this video, we'll discuss about the specific topic regarding the applicability of IND AS 109, that is financial instruments and derivative. We'll discuss about on-use exemptions. IND AS 109 is applicable to commodity contracts also. We may call it non-financial contracts that can be settled in net. So what is the net settlement? If a contract can be settled in cash or by exchanging financial instruments or by delivering the financial instruments, it is called to be net settled for the fluctuation of the prices in the commodity price or etc. So in this case, if a commodity contract that can be settled in net, Ind AS 109 will be applicable to it. But there is an exception regarding on use. If a commodity contract is entered into and continues to be held by an entity for the purpose of receipt or delivery with an objective of purchase, sale, or its own usage requirement, in that case, Ind AS 109 will not be applicable. But when we are checking regarding the own use exemption, we need to check the substance of the contract over its form. So, we need to say that it may often designate as a own use, but in substance, it may not be of own use. So, in that case, we need to apply 109. For example, if terms of the contract permit for the net settlement or net settlement is not explicitly defined in the contract, but entity has a practice of the net settlement of the contracts that it has defined as a sale or purchase contract for own use. Another example is if there is a practice of taking delivery and selling within a short span of time for the purpose of taking advantage of fluctuation in the prices, short term fluctuations in prices, or to earn a dealer margin, or a non financial item is readily convertible to cash. In these cases, although the contract may be designed for the purpose of own use, but the substance of the contract we need to check, and if we find that it is not for the purpose of own use, in that case we will apply Ind AS 109 and we will not apply the on use exemptions. Another thing regarding the on use exemptions, that an entity may irrevocably designate a contract for measurement at FETPL, and this designation can be at initial recognition only if the designation for measurement at FVTPL eliminates or significantly reduce the inconsistency of recognition, and it can be designated at inception only. So although Ind AS 109 is not applicable because of the on use exemption applicability, but an entity has an option to apply 109 irrevocably at the initial recognition if it eliminates or significantly reduce the inconsistency. For example, if an entity entered into contract to purchase steel at a later date, and to counter the price fluctuation, entity started to hedge them. So in this case, if entity does not opt for the hedge accounting, so it has an option first either to go for the hedge accounting, but somehow it does not opt for the hedge accounting because of the administration burdens or so many things that need to be taken care in case we opt for the hedge accounting. It may apply for the Ind AS 109 under the designation option at FVTPL. So in this case, if we opt for the designate contract as at FVTPL, the result will be the similar. It will go in profit and loss account. So this is all about regarding the on use exemptions in 109. If you have any suggestion or query, you may comment on the video. Thank you very much.